Thank you. Good afternoon, everyone, and welcome to this session on how do we bring users closer to the credit line discovery as well as utilization. So access to credit for a vast and diverse country like India has often remained a sort of a challenge. How do we solve this problem for 1 billion plus Indians is a question that a lot of us, policymakers included, have been grappling with. Interestingly, this panel discussion comes a few days after the announcement of the unified lending interface by the RBI governor, which is essentially aims to do what UPI did for payments. Of course, I think as we embark on this journey, there are also critical questions that we need to look at and explore. First, of course, being how do you bring users closer to their credit line? How do we make users aware about these credit line? How do we sort of encourage them to take use of the credit utilizations? How do we create more seamless customer experiences? And these are sort of complex questions. I think the challenge here is not just to make financial products or credit products available to customers, but also to make it accessible, understandable, and usable. And to help us sort of break down these concepts, to help us understand what innovations are happening in the sector, how the industry is trying to solve some of these issues, what kind of complexities, what kind of pain points are they still sort of struggling with, what should be the priority both for the industry as well as for policymakers and regulators in India to sort of promote innovation in a responsible manner in this space. We have with us like a stellar lineup of speakers. So without further ado, I'll sort of quickly go to the speakers. Maybe we can start off with a quick opening remarks on these issues by all of you. And then I'll sort of start with some very specific questions or issues that I want to discuss with all of you. And of course, subject to availability of time, we'll also try and take in some questions from the audience. Ashish, do you want to start off with the opening remarks?
Thanks, Shehnaz. So when we talk about credit line, first thing we have to look at is that who can give a credit line? And that's where as we stand today, it is primarily banks that can offer and not necessarily NBFCs because you require an underlying liability account. So there are two broad challenges or issue. One is product, availability of product from a supply side, and literacy, especially digital financial literacy, and which is underspoken, underwritten, and underthought about from a demand side. So it's about giving you a line, but you don't know how to utilize, and then we claim and crib about over leverage. So I think we need to just dissect the problem into multiple compartments and look what needs to be done. Leveraging both technology as well as processes to address this problem at large.
Thanks, Ashish. Vaibhav,
Sure. Thank you. Good afternoon. Excited to be here. I think the fundamental to my mind, the question is even before the concept of CLI comes into play. And the question is about access to credit. You know, I think let's just put one macro data in front before we jump into CLI and start solving the CLI as a product problem rather than credit which is a base essential issue problem. So India GDP to credit is about 59%. So our total credit is about 187 trillion. About 60% of that get addressed between banks and development financial institutions and larger institution, and 40% by the non-bank finance. So basically what it means that the 70% of the population still doesn't have access to the structured credit. And I think that's the core of it. What CLI does is brings in efficiency for you to get access to credit and efficiency in utilization, reducing your borrowing cost and the convenience.
Some of the initiative, but I think this credit lines is not only relevant for the individual or retail borrowers, but I feel it's also equally important for the other ecosystem of lenders, probably fintechs, other smaller NBFCs, right? So I think from our perspective, typically when we look at, because I've been a career banker, what we felt is if you use the banking infrastructure very well, you can always put together a good product. Of course, that will lead to the further, utilization of credit and doing the last mile credit, because I think we have seen that, of course, we have got a very, very robust banking ecosystem. But I think NBFCs and microfinance companies have played enormous role in actually distributing this credit. And probably if we combine the banking infrastructure and of course the appetite or the underwriting capabilities, I think it would be a great decade ahead, and I think the ratios, what we talked about, could be further enhanced. So I believe while Ashish is right, the need is much more there. I think it's an exciting decade to look at using the combination of DPI and the capabilities of the NBFCs as well.
Thanks. Ashish, actually, I'd sort of start with you here because you obviously highlighted the kind of credit gap that exists today in India. And of course, that's a huge number, and I think generally government as well as industry is trying to solve for it. Perhaps, we can start off by talking about what the industry currently, the financial sector, is actually doing, innovating. What kind of emerging tech are we seeing that makes it easier for customers to find and access credit lines? And how are these technologies sort of leading to a more seamless sort of user experience? And I think while you talk about these kind of innovations, it'll also be useful to, from you to get an insight in terms of the kind of pain points that sort of still exist, both for the industry and issues where perhaps more innovation or more regulatory support or policy support may be required.
Thanks. First, just to avoid confusion, there are two Ashishes on the dais. Correct. So, I think the way to look at it as the evolution of technology, what has happened, and I think fair to say that the credit growth is about 2.5 times of GDP. And that's ensuring that we are able to supply the credit. And the interesting part to what my friend mentioned is that obviously, if you split it by the sector and you start from bottom of the pyramid where microfinance and the micro-entrepreneur businesses come, then you have MSME lending, then you have vehicle finance, affordable housing, and so on and so forth. And you keep on going to urban poor and the prime and near prime obligors. And the same thing on the commercial or on the corporate side, so SME going to mid-sized corporates and so on and so forth. Clearly, the growth has been is about 14 to 18%. Some of the lower underserved sectors are growing at about 18 to 24%, especially the sectors I kind of specifically mentioned. And that means there's a lot of heavy lifting being done by the non-bank finance companies in conjunction with the bank. And I think that's evident to ensure the flow of credit. Northern Arc, actually, and important to mention, we were set up with a core objective for the seamless flow of credit to the underserved sectors in India. And over a decade and a half, we finance about 1.7 trillion or so, give or take, touching about 80 million lives. This means we are seriously involved in ensuring, and that's what our name reflects, which is essentially the glide path from west to east, is to ensure how do we get people who have access to money to people who need money. I think what has happened with the advent of 5 or 6 key factors, the Jan Dhan account, the JAM Trinity, the UPI networks, and now the entire digital public infrastructures, is that for us to underwrite that obligor in the village has become far more easier. For us to underwrite that obligor, the small business person in a tier 3 city, is far more easier. And that creates the innovation which is required for you to ensure the flow of money happens seamlessly. Now, if you talk of technology, what is actually happening? One is the big build out of the tech capabilities, the tech core infra, which is loan management system or the loan origination system, which you will talk about, are becoming far more intuitive, are becoming far more agile. In good old days, and why do you need CLI as a product? The credit lines were originally given to a larger or a mid-sized corporates with established performance. And to the point, what Dr. Desai spoke about is that it was given by the banks, and the credit line can only be as per RBI to a checking account and not to your savings account. So you can have a line of credit on your checking account as a company, but as an individual on my savings account, I can't get line of credit. What's the new age technology is enabling you to do is that enabling you to underwrite an obligor looking at my salary, if I use what I call as a social quotient, SQLs, for you to arrive and estimate an income, and they say, listen, this Ashish Mehrotra is good for X rupees. In old days, 10 years ago, you would have said Ashish Mehrotra is good for X rupees. I would have given you X rupees of loan, whether it could be a personal loan or a business loan. That's a different product. And it would have an obligation for me to pay a monthly installment at some periodic interval, month on month, to ensure I'm done. Now, there is a cost to it. There is a cost for the lender for them to hire, to identify me, to underwrite me once. There is cost of legal documentation, and I'm sure no one better than you, that I need to enter into a stamped agreement and so on and so forth. And then for me to borrow, if I go back to the same institution, let's say 6 months later or 9 months later, saying, listen, there is a marriage in the family, or listen, I need to go for a vacation and I need money, they'll say, listen, I'll book a top-up loan for you. Now, broadly, I'm just trying to simplify this for the context for everyone. Now, what the CLI does is that once I've underwritten that Ashish Mehrotra for a particular line of piece, using the machine learning, using the fairly agile loan management system with an intuitive capability to interact with Ashish Mehrotra as an obligor, looking at my performance data, my cash flows, because now if I do a lot of transaction using UPI, that data is available. They can say, I will use the dynamic underwriting to ensure, looking at the seasonality of or the cash flow between my income and my expenditure, when to give more money to Ashish and when to ensure that Ashish has a next need. So I, as a lender, is the first one to go to Ashish, saying, Ashish, I had underwritten you, I had given you X rupees, you can take another X plus 1. Now, in the old system, you'll have to book a top-up and a new loan. What CLI does that I have underwritten you for a certain quantum and allow you to take small loans multiple point in time, bringing in the efficiency for you to have smaller repayments for number of times you borrow. And I think that just empowers it, and that enables that these products then can be offered by the non-bank finance companies who are then have an ability to underwrite those customers and provide access to them by making product more affordable, being there at that hour of need, and making the convenient repayment patterns. One of the big power of the CLI is it allows me to pay more than what I am required to pay. In a conventional loan, I have a monthly installment which I need to pay, and if I make payment anything beyond those monthly installment, there's some prepayment charges and so on and so forth. In a particular CLI kind of a product allows me to make those payments many years ago. And I remember one of the big innovation, and when I was in the banking days, we created an offset mortgage. This means at the end of every day, you sweep the excess money lying in my savings account, which is not earning anything, and go and repay my loan. And that money is available next day morning and can use to draw down. I think those are the big power which technology is enabling us to do. And I think the three big factors, with digital payment infrastructures coming into play, with account aggregators, with UPI making the payments, and all of between OK and ULI, what will happen is that we'll be able to provide credit at a far more efficient, with higher degree of efficiency, lower cost of originating, underwriting the customer, and more importantly, making it more convenient for that borrower to have access to money. And then the collection part follows the same technology curve, which we'll talk hopefully in the next question.
Sure. Thanks, Ashish. I think, this sort of point, and what we are also seeing is that with tech, generally financial institutions are also moving away from an asset-based lending model. And that has also been possible because of the kind of collaborations that are happening between traditional financial institutions and new age tech companies. So, Vaibhav, maybe you can talk a little bit in terms of the kind of collaborations that we are seeing in the industry, which helps you to sort of leverage tech in a manner to sort of promote this kind of credit line discovery. And secondly, credit line discovery is one point of it. The other aspect is also about credit line utilization. How do we make the experience itself also seamless for consumers? Perhaps maybe you can sort of...
No, sure. I think very interestingly, look at the regulatory support of framework side. There've been so many discussions around discouraging the unsecured lending, And of course, given the nature of the entire lending ecosystem, any bank or any NBFC for that matter wouldn't really go for unsecured lending, right? But I think India, of course, it's a great country, but I think we were still not there in terms of collaterals, right? So, getting that collateral-based lending is quite difficult. And that's why I think, as Ashish spoke, cash flow-based lending becomes very important. And the moment you are, accessing the entire cash flows, monitoring it, building the early warning signals, it requires heck of a technology. And it has to be uniform, right? So tomorrow, let's say Bajaj Finance is building a particular infrastructure. It can't be interoperable with, let's say, L&T Finance or maybe Tata Capital, right? So I think that's why probably some of the platforms, be it ONDC, be it OCAN, or in fact what we build in TransBnk, I think we've been building the interoperable infrastructure, right? So that for these particular lending ecosystem as well as banks, they do not have to get into multiple cross integrations, right? The single platform itself can take care of accessing the cash flows, building the early warning signals on top of it, building dashboards, building the entire alert mechanism systems. Of course, it gives you a complete glimpse about the credit underwriting. And second, of course, the actual available credit in the system, right? Very interestingly, Ashish spoke about his erstwhile banking days, and it's a home loan OD product which some of us might have used, right? Now, when you have that home loan OD product as an individual, you exactly know that how much OD limit is available in your home loan account. And it's a wonderful product probably bought by some of the MNCs banks, and of course now most of the Indian banks like SBI and IDFC Access, right? But I think if you talk about getting that credit utilization access throughout, there has to be some platforms. There has to be the consistent upgrades, right? And it deals with the proper information security. I'm sure Ashish will add to it. It requires a huge information security infrastructure. And I think that's where some of the platforms play a very important role. There are standardized set of APIs or infrastructure what really can help these set of borrowers. And if you look at the B2B loans, right, business-to-business loans around revenue-based financing or supply chain financing, I think a lot has to be done on these aspects, right? Underwriting, accessing the current utilization, and updating as as you go. Because it's not that you're underwriting and then you are basically updating your file or putting an upload into a particular system. It has to be real time because the borrower could be anywhere. He could be using any of the channels. He could be using banking channels. He could be using ATM, probably UPI, right? So idea is this requires a hell lot of ecosystem level collaboration. But of course, we've shown via UPI to the world that we can lead. This is one product where every country globally is looking at us. And I think that's where probably a lot of countries can, of course, then look at what we have built in India in terms of DPI or in terms of the infrastructure.
Sure. Thanks, Vaibhav. Ashish, Dr. Desai, I would like to come to you. I mean, we've talked about data generally, I think, in terms of how it can sort of help in these scenarios. There's a lot of literature, there's a lot of studies going around big data analytics. So in terms of, how can economically used modeling for big data analytics be used to sort of perhaps improve credit customizations? And are there some sort of challenges to using these kind of models, or perhaps what are the limitations of these kind of models? And secondly, I think, sort of Vaibhav and Ashish sort of touched upon the innovations that are happening in the industry, the kind of strategies perhaps companies are looking at. But maybe you can also tell us in terms of the non-financial strategies to sort of scale up these kind of businesses or to scale up these kind of products and solutions.
Okay, thanks. So let's take a step back, and what is the objective of giving a credit line for production? I mean, it could be for consumption also, but the production credit line is primarily labor force participation. That's the objective of doing this. And if that is the objective, it has got two aspects to it. One is availability of the product, and then the capacity of the individual to apply that resource. So in theoretical framework, one is called as a resource, other is an agency or capacity to use that resource. Now, focusing on the resource part, and as Ashish mentioned over here, we are looking at the mid-market and base of the pyramid, and then we're looking at how they can be participated in the labor force. Most of the time, organizations shy away from giving them credit line because of their own inability to assess the customer risk. And inability of, and just a data point over there is we did some analysis over UPI payments and unsecured personal loan over India, for India as a macro, and also at a district level. And you find there is a causality. That means if an institution's not having ability to create a product based on data points should not be the reasons why the customer should be charged more. And in India, like in many of the countries, ability to pay and willingness to pay are inversely proportional. So, so the challenge, I think, is primarily within the institutions to think through out of the box and create. You require POA, proof of address and proof of identity for regulatory purpose. You necessarily don't require it for credit scoring. There are, as he mentioned, there are alternative points that one could use. So one is skills, second is willingness and access to resource. And I would like to touch upon over here is we were doing some analysis during the COVID times. So we took a base of between Maharashtra and Gujarat, about 55,000 customers of two particular banks, and they had multiple products, individual loan, joint liability group lending, and overdraft product. And we simulated the COVID shock by looking at nightlight data or Google mobility data, both. And what we found out that the best performing product was actually a credit line product, not a JLG or an individual loan, when a shock's hit. So from a portfolio basis, it is necessary to balance such products. But however, most of the institution will not go down that line saying that it's a risky product and we don't want to touch on that. The second part, when we talk about the capacity, is that's where the issue is of are we doing enough to make customers financially literate, and in the current context, not financially literate, but digital financial literacy. And using digital financial literacy, making them aware of it, of how to transact, what to transact, and what is the limitations of that. I think that's where the gap is. So it is not just the onus on, it's the onus not just on the institution, but the larger ecosystem to build both from a supply side as well as a demand side support. Yeah.
Sure, but I mean, at this point on digital financial literacy, of course, this is something that often sort of comes up, but I'm just trying to understand what would be the role of different players in the ecosystem. I mean, of course, there is the industry, there are regulated entities, there are tech companies, then there is the government also who's sort of involved in, there's a stake, especially when we are looking at a more DPI sort of an approach towards these kind of technologies. What kind of role do you see for each of these stakeholders playing in creating that sort of conducive environment for financial literacy, for innovation to sort of bud?
So there is a trioca that plays in of technology, policy, and regulation. And all the three have to play together to make it a success. So if we have the technology in place, but for example, in the policy, of course, the microfinance segment or the last mile connect, I wouldn't call it the microfinance segment, but the last mile connect has got enormous responsibility to deliver it. But can we look at saying that if we got a CSR budget, particular percentage of that CSR budget can actually be assigned to do financial literacy? If institution A is doing a financial literacy content, why should that be replicated? Can it be centralized and disseminated to the larger base, rather than each institution creating financial content? The second part is financial literacy is conducted, but nobody assesses financial literacy. There are no tools that are being used to assess, measure, and incorporate in credit scoring. And that's the area that needs to also have some focus on.
Got it. I think we've talked about alternate data, we've talked about credit scoring, and I cannot, as the lawyer in me, cannot stop but ask you, because we are obviously, these kind of, with newer forms of data that are being used for credit scoring, with AI sort of coming in, a lot of questions around regulatory, legal issues sort of come up. Plus combine it with the ever-evolving lending ecosystem in India. Just a few days back, the governor talked about the unified lending interface. We have the account aggregator framework. We have a new data protection law in India that's coming, which perhaps may impact in terms of how we are using data in the first place for the financial sector. Obviously, RBI has or time and again come up with various guidelines for digital lending to sort of play, emphasizing who should be the ultimate sort of, where the ultimate buck stops, who should be responsible for it. Now, in this sort of complex regulatory environment, in this sort of, evolving regulatory environment, how do you sort of see businesses navigating this complexities, especially, emerging tech companies who are sort of entering this space? So anybody who, if you would sort of like to.
And I want to add to Prof. Desai's comment. I think one of the stuff, there are a few companies who live by the purpose of which we were set up, and I'm very proud of what we do in Northern Arc, to your point. Large part of, over the years, the CSR budget has actually been allocated towards financial literacy. Because of what we do, impacted about 80 million lives so far. About 55 of them would be women at the villages, and so we're deeply committed to ensure that improvement happen. I think, one thing is clear, that the world we are living in is far more dynamic, and the regulation will continue to evolve. What we are seeing today, both especially, we spoke about secured, unsecured risk, we spoke about underwriting, we spoke about technology, we spoke briefly about ML and AI. One of the big pieces which is important, and you spoke about RBI, I think one needs to be clear between, as a regulated entity, you have an obligation. And that means the buck stops at us as a regulated business. If the buck stops at us, I need to ensure that I live up to the principles which defined by the regulator, the central bank, for us to conduct our business. Clearly, and that in a sense reflects in a mission saying we want to be an efficient, reliable, and responsible enabling of finance to the underserved sector. And today what you're seeing, whether we saw a little bit of heating in the consumer finance segment or what we are hearing in the microfinance, clearly a lot of it led by that if you're looking for growth and you end up doing more or doing less. I think, so that responsibility for you, it has to be there. The second, I think the regulator is now pretty clear, differentiated between a loan service provider and a regulated entity, and the responsibility and obligation of a regulated entity to conduct. So between bunch of fintechs who are essentially a platform, and they're doing a fabulous work of essentially identifying the customers, connecting with them, engaging with them, fulfilling, deepening relationship, and that's a contiguous cycle. Then to the regulated entity for them to ensure the seamless flow of credit, and that's the work you need to do in line with the regulation. We've seen some of the events, what has happened over the last few years. So it is, for a regulated entity, it's your obligation to ensure that you perform and conduct the business in line with the law. I think that's completely non-negotiable. To me, the way I look at it, the RBI gives me a license to conduct the business, and I need to ensure that I conduct that business as per the law. The reason I breach it, I don't have a license to conduct. I think that's, to my mind, for me, the buck stops there.
Thanks. Vaibhav, Dr. Desai.
So I think the whole point is this cost of compliance, right? Of course, it's non-negotiable, and I think we've had enough instances where it's proved. And I think globally, when the recession hit, when we saw, a lot of these black swan events, pandemic, I think we saw that the Indian ecosystem was quite resilient. I think one of the primary reason was the regulators and the ecosystem actually has been always prudent and resilient. And of course, the collective responsibility is actually very well distributed in this case. Probably being an ex-banker and of course now the platform, I think when we look at these problem statements, we felt that the need probably is not only to identify the risk and of course resolve the risk, but also keep on continuously evolving, right? And that's where probably a lot of times spending a large part of your budgets for banks or for NBFC on these aspects. Of course, it's a most crucial cardinal point for you. And that's why what we thought that this is the holy grail. You can actually help building this ecosystem. And of course, it's not about today's journey or the journey of next 5 months or 6 months. It's going to be a continuous journey. And of course, there are going to be far more, let's say, regulatory changes, complexities are going to evolve. So the collaboration will always evolve. Standardization, as I mentioned earlier, would always be required. And of course, some of the larger set of NBFCs can afford to build this in-house and spend some large IT budgets. But what about, let's say, the long tail of next 1,000 lenders? Probably that's where the democratization of tech stack is required.
I'm going to add to it. I can't be here. You know, for what we were set up and staying true to our mission, we run two of the probably the most sophisticated but grossly underrated, underspoken platform. One is called Nimbus, with which we've done over $1 trillion of financing which is essentially a B2B financing platform between multiple small non-bank finance companies and platforms who like to get access to credit. And that platform enables and connect to all the intermediaries required to be connected, whether it's bureau, whether it's rating agency, whether it's law firms, whether it is for all that connection. And then eventually that money can go into either a balance sheet, we can invest on funds, or we can place it to other investors who invested in that credit. The second most interesting platform we run is called Nimbus Point of the Partner Origination Systems, which seamlessly ensure about anywhere between 25 to 30,000 loans being underwritten a day. And this could be many products, correct? This could be a small micro loan. This could be a personal loan. This could be a BNPL. This could be a small business loan. It could be a slightly larger quantum of business loan. It could be a two-wheeler finance, and so on and so forth. And there are multiple originators, correct, for the risk, for the role we play, who are connected on that platform. They pushes the customer to Northern Arc. Northern Arc then individually underwrite, does the KYC, validation, attestation, underwrite, penny drop, and eventually disburse the money and kind of then service it. The power of this is ensuring that the technology, coming back to your point of CLI and enabling the flow of credit, makes it so agile for me to run multiple product variants. 15 years ago or 10 years ago, to create a loan management system for a housing was very difficult. He spoke about OD-linked housing product. I can proudly say I worked on it for the first time. We got it in India. I spent working in Australia to learn and bring it to India. But the point is that you are able to, that today's technology enabling you to create multi-variants. So if I am one of the lenders on that platform, I can go and select saying, listen, I love all the people wearing white t-shirts and blue jeans. They will get scored differently vis-a-vis people wearing pink and blue. I think that's the power of it, and I can adjust it every 5 minutes. And obviously then you have data capabilities, underwriting, all of that ensuring is that you're able to provide that credit. And you know, the power of the CLI comes in, listen, I've underwritten you once, and I can provide you multiple times for you to dip into that line and pay me back as you'd like to pay back. And I think that's the simple, but that's the big part of delivering a promise to the end customer and ensuring the flow of credit in a responsible manner. Yeah.
Ashish, you can add.
Sorry. So just quickly, 2 points. One is you mentioned about with DEPA and with networks coming out. So regulation as such is sometimes, not many times, open for interpretation, but then it's the onus of the institution to go and get a clarification. The onus is on the institution to go and get a clarification. However, with the regulation is also a second part called ethics, and there is nothing called as a gray part in ethics. And that's where, you know, referring back to what Northern Arc is doing in spirit and in letter, you follow what you're supposed to do. You're good. Second comment on the data side, what happens at the back end is actually you are doing a multiple round of machine learning cluster analysis to have, today it is blue shirt and white jeans and white shirt and blue jeans and red, and you can have multiple dimensions and you start then customizing the products for each of the borrowers. And that's what the power of technology with data is enabling organizations.
So
actually, I want to add one thing, and then you please come in. One of the scorecards we do essentially it's called NeoScore, helping especially to the micro and the small business piece, is that helping people answer the 4 most simple but probably the most complex questions, is that whom to lend, how much to lend, and what price you should lend. In case you do all three of them, what will be the probability of default? And I think that's the power of ensuring that our commitment in translating into the real flow. Sorry, over to you.
No, I think I can see the excitement with both Ashish's. I got sandwiched between them. And I can see quite a few people with white shirt and blue jeans sitting over here. So I think they've been lucky in terms of credit underwriting. But I think just one point to add. When we look at these underwritings, it's not only the B2C aspect of it. Right? I think probably the account aggregator ecosystem, while it's not mature at its peak, or DEPA, he mentioned about the Data Empowerment Act. But I think most of the times what would happen is when you are underwriting the SME or MSME, where I think probably the India is more credit hungry. I think that's one area, and probably Ashish must have seen some as his academic observation. I think that's one area where probably more and more work needs to be done, and I'm sure Northern Arc has been doing tremendous initiative in that space. But I think that's one area where most of us are looking at probably impacting these MSMEs or SMEs, and I think that's the core of Bharat.
Sure. Thank you, everyone. I think our time's up. So I'd like to thank all the speakers. I think this was quite an interesting session. I'm sorry for not being able to take up any questions from the audience. But I think we started off with a problem statement in terms of how access to credit generally has been an issue. But it was quite interesting to hear, I think, the innovations that are happening at the industry level to be able to leverage tech and data in a responsible manner to sort of serve different segments of the Indian population. Of course, that itself is a huge sort of a task before us. But I kind of feel that responsible innovation, policy, collaboration, all the priorities that our speakers have sort of highlighted will definitely be the way to sort of answer the question that the panel had before them, how to bring users closer to the credit line discovery and utilization. Thank you for your time.
I think we do have time for Q&A.
Okay.
So we do encourage you to ask questions.
Sure,
if you
great.
have a question, please put your hand up. We'll pass on the mic. Make sure you introduce yourself as well.
I think we are happy that there are no questions.
No questions, okay.
Also, I absolutely love how when you don't have a question, you turn around, किसी और के पास तो नहीं है. Thank you so much. Please give all of our panelists a huge round of applause.